Hello, everybody. My name is Michael DeJoy, and welcome to the Dash Trader Newsroom and the number one best trader Fall 22 Winner's Circle and Market Analysis. And my name is Michael DeJoy. I'm the Director of Education here at Dash Trader. I'm also a licensed professional, and I'm joined by my co-host in the Nasdaq market site, Jill Malandrino, who is a global markets reporter for Nasdaq. Jill, how are you today?
Good, doing well, thanks. Busy couple weeks.
Yes, it's been a couple of weeks, and certainly the news does not stop coming in. And the Federal Reserve President Bullard today came out saying that rate hikes thus far have had limited effect so far on inflation. How do you interpret that for 2023? Does that mean we're going to have more rate hikes ahead? What are your thoughts on this?
I really don't think their strategy has deviated based on these comments. It's tough with the Fed, right? They use lagging data to determine their policy, and we're already seeing inflation data come back down, and that's stuff that's a month old. So who knows what it's actually looking like right now? And it's surprising to me there are so many real-time data providers out there that can that are using actual pieces of data, not necessarily surveys that they send out to select economists to provide them with their thoughts on inflation. So I just feel like it's lagging. It's really not real time in terms of what we're seeing. But I think at the end of the day, the market somewhat digested it pretty well. It has not reflecting a change on Fed policy.
Yeah, I mean, we all pretty much expected that there'd be rate hikes all through 2023. I mean, right now the Fed interest rate, base interest rate, or Fed main interest rate is at 4%, and there's six opportunities or for rate hikes over the course of 2023, just about every other month. And we were pretty much expecting that there'd be increased interest rates all through 2023, and I think the market's pretty much factored that in at this point. The real impact, obviously, is going to that all remains to be seen as things continue to progress, et cetera. Next on Target here is Target. TGT came out with some bad earnings. They lowered their expectations for the holiday season. I mean, I kind of think of Target kind of like the old Sears catalog from when I was a kid, or Sears from when I was a kid. That was where a lot of people did, like, most of America, a lot of America does their shopping there between Target and Walmart. There's been a big differentiation between Target and Walmart, at least in terms of the way that their sales are broken down. Walmart does a way more of a grocery and food business, whereas Target does way more of, kind of the traditional retail products. Needless to say, the big question on my mind, and I would imagine everybody's mind, is that will poor retail sales be the Grinch that stole Christmas, and potentially steal the Santa Claus rally? Because generally, going into the end of the year, that's the time when we would expect the Santa Claus rally. What are your thoughts, Jill? What do you think we're gonna see this year with these kind of inflation taking the wind out of the consumer sale a little bit?
Well, so far we haven't seen inflation take the wind out of the consumer sale yet. And one thing with retail that you have to remember, it's always going to be a tale of the haves and the have-nots. You're going to get from somewhere else because there's if you take from side A, you're going to have to give something up on side B. It has always been like that. I mean, if you look at the divergence in earnings performance with Walmart versus Target, Walmart has the pricing power. They did not see a slowdown of consumer demand, and they were able to execute. Target was not. If you take a look at TJX, which has always been one of my favorite stocks, the off-brand retailers, which seem to perform in any kind of environment, consumers are always looking for a deal. Mike, you and I have spoken about this several times. Because of the inventory glut, which has been an issue for big box retailers, where do you think that inventory goes? It goes to TJX, right? Yep. So it's the holiday time. You have the excess inventory. They have a little bit more leverage with their pricing there. They always have good deals, anecdotally speaking. So it's going to be, all right, if department stores don't perform, you're going to get performance somewhere else. If a big box is being challenged, TJ Ross stores, they're going to do well because they are going to benefit off of the inventory glut. And that has been the story of 2022, where retailers particularly in big box, took in too much inventory, still thinking on the pandemic mindset. So it's always going to be the haves and the have-nots. So to say that Target is a sign of things to come from the consumer, it's way too early to tell. We really won't kick off the holiday shopping season in earnest until Black Friday, which, believe it or not, is a week away.
It's, I
So
can't
I
believe
think,
it.
again, the market is going to really um, be predicated and respond to what's happening with the Fed and inflation and more macro than they will necessarily the consumer, if the consumer remains steady as they have been throughout, since 2020.
Yeah. And we saw actually last quarter too, Target kind of messed up last quarter as well with the kind of their ordering and their supply chain issues. They really over ordered. So I mean, this could just be a company specific issue. That's always a possibility. So you have to always look to see if it's more than just one company, if it starts to form a pattern. And I think that that's pretty much what we're looking for. Now, me personally, I love TJ Maxx and Marshalls. Those are my two top picks for retail and for Christmas shopping sales. I mean, they have some great products and certainly always have great deals, like you said. So, jumping right along and this is an issue that we certainly have spoken about in the past. You and I are very big followers of DeFi and crypto, and we've spoken about Bitcoin and Ethereum, and certainly we had a very big breakdown in the price of Bitcoin and Ethereum on the lack of confidence that was caused by the FTX financial collapse. The big question on my mind, and what I'd like to put out to you, is this going to cause a financial contagion that will spread to other financial institutions? It has a real feel to the similar to be feeling similar to something like the Lehman, the Lehman bankruptcy. Obviously, this does seem to have some elements that are worse than the Lehman bankruptcy in some ways, but in some ways it's not as big. Certainly, it's racking up some big numbers. I think the damages are up to about $20 billion in damages. There was certainly an element that was worse in that it was, customer funds were used and were used improperly by employees and whatnot. And certainly, this was also somewhat offshore with the I think the one of the main brokerages and firms being registered in the Bahamas. So certainly there's some differences there, but what are your thoughts? Is this going to lead to a financial contagion? Could this potentially spread outside of the crypto space? What's going to happen in the crypto space, in your opinion, going forward?
So there's a couple things to unwrap here. The first thing being is we go through this every 10, 15 years, and we'll be talking about this in 10, 15 years with another systemic um, item that we need to consider. The difference between this and 2008, 2009, I think the similarity that you will see theirs is how it becomes so systemic with the different players involved in the crypto space, but there wasn't a centralized agency to bail out these crypto exchanges like there was for the banks back in 2008, 2009. Really, what's the difference? Just had the Fed to bail them out. This time we don't have anyone to bail them out. And perhaps that could be a good thing because you get all of this out of the system. We're not band-aiding anything. I think it's a wake-up call to the regulators for a number of reasons. One, consumer protection, but two, Mike, if we're just like, oh, it's Bitcoin, oh, it's digital assets, it really isn't money. Well, guess what? There are billions of people around the world that do transact in digital assets. And if we do not take the lead on regulation to protect customers, we are going to lose out on the innovation race as well. And you and I have spoken about this countless times. So perhaps this is a wake-up call to the regulators. You had this morning, it was around 8:15 or so, you had I can't think of his name right now, but the financial services head on CNBC this morning, and he was saying, digital assets are here to stay, and we need to regulate it so that it doesn't go off exchange out of the U.S. And we're able to protect investor interests from retail to institutional investors. Mike, at the end of the day, certainly there was a lot of ego here. You commingle customer funds, which is like investing 101. You don't do it. You just don't. For ethical reasons, you also don't do it, but that was done. Zero risk control, zero leverage, in my opinion, and many people way smarter than myself in the space, leverage in digital assets just does not be commingled or coexist. And I think all of these are fixable. I think there could be I don't want to say a halt, but perhaps a hold on the crypto trading frenzy that we saw. But in terms of the development of market infrastructure, of regulations, of the promise that the underlying technology blockchain brings, I don't think that is going anywhere. But this is the wake up call. We need infrastructure from a regulatory and market structure perspective, and because it is not going anywhere.
Well, there's one thing yeah, that I mean, pretty much I agreed with everything that you said, but there is one thing that I'd like to add, which is every time I'm 26, 25 years, 26 years in finance, every time I've heard the word cross collateralization, it has never led to anything good. I mean, cross collateralizing any kind of debt obligation, any kind of asset, just generally turns into problems. I mean, in 2008, cross collateralization, collateralized debt obligations, collateralized mortgage obligations. I mean, that was really the underlying problem behind the financial crisis. That was what led us to some big problems in 2008. And then here, we have a new asset class, but we have the same old cross collateralized loans, cross collateralized debt obligations. So it never tends to,
Yeah. And Mike, we
see.
see this every 10, 15 years. And I know it's not quite, it's boring. It's not sexy. Why we have counterparties, why we have counterparty risk management, why we have custodies, why we have market makers, why we have exchanges. Whereas in the digital asset space, a lot of these are all rolled into to one. There needs to be checks and balances. And there's a reason why it's not a one size fits all platform, because you get into a situation, too big to fail. Well, guess what? That always seems to play out where um, there was no oversight, and the fact that it was so blatant as we start to see the story play out, um, you know, and I think both traditional folks in the industry, I guess younger people who are in the industry, if you don't get digital assets, it doesn't mean boomer, you don't get it, right? Like we have to stop thinking with that mentality. To be able to ask these critical questions, to be able to ascertain the risk, is something that legacy and new finance is going to have to come together on, because this is where risk management and experience comes into play. That if you did have the proper oversight, if you did, it's great that people are young and they're in their 30s and they're innovative and all that good stuff, but you need the diversity and experience. It's more than just diversity in the typical way we think of diversity, but experience diversity is something that cannot be understated.
Yeah, and I'd have to agree. I mean, there are good practices and procedures. I've been a registered person, since 2000, and you tend to need the assets actually in place. You certainly should be careful about celebrities recommending new asset classes, and certainly I think some heads are going to roll, and there's going to be some ramifications there for some of the celebrities that helped promote FTX. That certainly helped kind of get FTX really well adapted. I mean, I'm a little surprised by all these big institutions that jumped on board with FTX. So I do think it's going to be an interesting, it's going to play out in an interesting way. But it is a lot of the same old problems that we've seen time and time again in the financial services industry, which is that when good practices and procedures aren't followed, it turns into a mess for everybody. And unfortunately, in this case, it looks like that $20 billion, it's going to be a hard time getting any of those people their money back, which is going to be a big hole to fill. So let's move right along and brings us to the to a big welcome to the One Best Traders Winner's Circle. And unfortunately, our winner of the number one best trader swing trading competition, William, who lives in Chicago, he can't join us today as he is doing his day job. Needless to say, William had taken part in past competitions and has been trading on trading simulators for some time. His strategy he used was pivot points and opening breaks, daily opening range breaks. His mistakes was he tried to follow and seek better results by following other traders in the competition. This kept him from his initial plan And originally, in the beginning of the competition, that was really detrimental to him. He learned the importance of being familiar with the platform prior to the competition, and fortunately, he had participated a couple times in the past. Patience and following his own trading plan was what he learned most from this competition. And of course, a big congratulations to William, who is our number one trader in the number one best trader competition. And that brings us to our number two man, which is Malik. And he won our second place in the competition. He's best 1017. Malik, informed me earlier today that he is from Virginia, but he's currently living in London as a senior accounts manager. His experience is that he only trades about 1 or 2 hours maximum in the pre-market, and he's been watching the markets for about 5 years. He's mainly used price, volume, and exponential moving averages, as well as VWAP, all fantastic indicators that we offer here on the Dash Trader platform. Some mistakes was when exploring the DAS's risk controls. He misused one of them and lost one day, which took him over a week to recover, during the competition. Now he double checks everything. He learned was not trading at the open prior to the competition, and now he's comfortable doing so. So he learned that the opening of the market is a good time for him to trade. And certainly that corresponds well with the time frame in London. He also learned a lot about the risk controls, as he mentioned earlier, that DAS offers. So Malik, tell me a little bit about what your mistake was using those risk controls with Dash Trader.
Yeah, as I mentioned before, I just got introduced. I watched a YouTube video and then I learned about the risk control page that DAS offers, and I was so excited because as traders, we tend to have that discipline issue as you start to kind of start trading. Most of the traders have that personality that they don't want to 9 to 5. They want that freedom of the time and etc. So discipline becomes an issue. And then when I saw him, I was like, oh, this risk control page kind of sorts out all the problems, solves all the problem for any trader who does struggle with discipline. But I set one of the risk controls to eliminate, like not allow me to enter new trades if I reach a withdrawal of 3% for the day from my capital. But I didn't know that it wouldn't actually trigger to cut any existing order and execute it before. So I went to work and then I came back and I was down like 11,000, which,
oh my God.
Yeah. So it took me about a week to recover from that. But after that week, I was able to kind of stay top 2-3 spots until the very last day. I think William had that low floater that moved huge from $7 to $28 and 70,000 almost worth of profits. Definitely took the lead there. But yeah, it's just that. But now I am comfortable with the risk control page and I know what it does. It's become more of like a helpful tool instead.
Oh, well, Jill and I had commented about the big swings and the consistency of the competitors this time. That there was a big swing at the end, and that certainly we saw that many of the competitors were profitable and stayed profitable early on. So I'm guessing your risk control issue happened in week 1 or week 2?
It was week 1, definitely week 1. I think it was the 4th or 5th day of the trade, and I think it was actually the 4th day because we started on a Monday or Tuesday, so it was that Friday. But no, I mean, yeah, it was just a mistake that I didn't tick that box where it allowed the platform to actually exit and execute a sell order or liquidation kind of thing if that is triggered. And I went and thought that everything is in place, but then next thing you know, I was about 11,600 down. I was like, okay, well, now it's gonna take me a bit of time. But
good that you were able to rebound from that. Jill, do you have any questions for Malik about his trading strategy as the second place winner?
No, I thought it's a great lesson to learn early to keep your emotions in check. Certainly, you want to learn that now while you're not sizing up in big positions. It's not an easy market. It's not like what we saw over the past 10 years, especially over the past 2.5 years, where everybody was making money everywhere. So, to be able to learn those hard lessons in an incredibly challenging market, not just for retail investors, but for people with 20, 30 plus years of experience. Mike, you talk to prop traders all the time. I think it's good to have learned those lessons now.
Excellent, excellent. Anything that you'd like to share with us, Malik, and future competitors, as we have another competition starting just after the new year with our sponsor, Cobra Trading?
No, I mean, first, thank you for having us and making this competition. It was a great tool. It was, I would definitely recommend it to everyone to join. Even for me, I've been watching for 5 years. I did learn, and it helped me significantly because ever since that actual competition, I am a lot more consistent because I was introduced to, like, you can't trade except for the open. You can't trade low floaters. You can't short something that is hard to borrow. And when I saw that I am not able to use those like extremely volatile names, and I'm not trading pre-market and after hours, but I'm still able to be consistently profitable. Now I am a lot more consistent than I was before. And so it's definitely something that everybody should try. And then obviously that's platform, if you have access to it, is very helpful when you have the platform that kind of not give you certain issues when it comes to charts and executing real time, and then that just all the data that you need is just available right there. So highly
Fantastic.
recommend
Are
it.
you trading on a live account just for point of interest?
Yes, I am.
So you're trading on DAS on a live account, or you're just trading elsewhere?
No, I'm trading now. I use IBKR, and then I was able to
Okay, they have
actually
offer
link.
DAS, right?
Yeah. So they were able to actually link my IBKR with Dash Trade, and that was just brilliant. So
That's awesome. Well, very good job, and
thank you.
congratulations.
Thank you so much.
All right, so give me 1 second. I'm just going to go and do my little introduction here for Roman. All right, so we have Roman, and he is a tree climber from France. He is our third place winner. He's best 1024. He's been trading for 2 years, and he's working to be profitable. His strategy is that he's shorted small caps at extension. So he's one of these, these small cap, low float stock shorters, which we've seen certainly a lot of in the competition. Mistakes, oversized his positions, managed his risk on the first day, used the remainder of the month to manage his risk and avoid over share sizing once again. He learned that he needs to work on managing his risk to stay profitable. So certainly a lot of risk management lessons have been learned. And je n'ai pas français bon sur le monde petit pas. Qu'est-ce qui se passe pour la compétition?
Eh ben, honestly, it's a good competition. I love because ça m'a permis, ça m'a permis de rester consistant en fait.
For me, it was good to learn consistency.
Yes.
Excellent.
Vraiment, voilà.
Oh, you can go ahead.
C'est le principal pour moi. Ça a été vraiment le principal de cette compétition. J'ai vraiment aimé. J'ai brûlé plusieurs petits comptes.
Okay, so the principal thing you learned in the competition, go ahead and I'll try to translate as best I can. Okay, go ahead.
Yes. I blow lot, little account. So now I focus on be profitable only.
That's it. Focusing on profitability and consistency, yes. I would imagine.
Yes. So I trade only on the price action and the volume and the gap up.
So you basically focus on trading gaps up and with volume, low volume stocks, and obviously shorting as well.
Yes, and read the tape.
And reading the tape as well.
Yes, yes. Learning, recording my screen.
Excellent.
Learning the tape.
That's it. Yes. Well, fantastic. And a big congratulations for making it to the third place. And of course, you're welcome to join us in one of the future opportunities to join myself and Jill in the Nasdaq market site if you ever make it out here to New York. Jill, you have any final questions or congratulations for Roman from France? I think it's awesome that we have people all over the world winning this competition.
I think it's awesome, and congratulations to everyone. And what I find valuable from what Roman had to say was sort of being agnostic to stocks, and whether you like the company or even the fundamentals, but really focusing on the price action and volume, and really leveraging that data to help determine support and resistance and entry and exit levels is really valuable. So that was very well done.
I use support and resistance daily and hourly.
Okay, awesome.
Yeah.
Using support resistance.
I want find the star align.
See, you want all the stars to align so that you take that high risk, high opportunity, high odds play.
Yes, with the tape.
Awesome. Well, listen, I want to thank both of you for joining us.
Congrats to Malik, because I never see the classment. I don't want to see the classment during the competition, because I think it's not good psychological.
It's not good psychology. If you're watching the other competitors, it kind of psychs you out. Yeah.
I do only the last day, and I almost do a bad thing.
You see, it could suck you in.
Yes, and I think my league too, because he lost only more 10K.
That's
the
right.
Last day. Yeah.
That's it. Merci beaucoup for good sportsmanship. Merci beaucoup for good sportsmanship and congratulating the other competitors. I'd love to see more good sportsmanship between our competitors and the way that you congratulated them.
Is on the top 3 during all the competition.
That's it.
Yeah. I am all time. I see every Saturday morning when I see your recap video on YouTube. I see him. I don't know his Malik, but now I know. I see Malik. He's always just in front of me.
Yes. Well, guys, I want to congratulate everybody on good sportsmanship. I think we need to see a little bit more good sportsmanship, congratulating each other, and certainly, it's you're trading against yourself, you're trading against the markets, and of course, you're trading against the other competitors as well. So a big thank you to everybody. Jill, I look forward to seeing you soon. I might be with you shortly, hopefully at the Nasdaq market site. But certainly, it's always a pleasure to have you. And to our competitors, thank you so much for joining us. And listen, that just because you're in number 3 and number 2 this time around doesn't mean you can't compete again and potentially take the number 1 spot. Okay, next time, Malik, make sure you know how to use your software and those risk management controls. And very, very big thanks to Roman in France. Excellent job, and be careful climbing those trees, please. Okay.
Thanks, Mike. Thanks for having us. Thanks, Joe.
I love trading. Thank you, man.
Thank you for being here with us. We look forward to seeing you in New York.
Hope meet you. Yes. Hope meet you to New York.
Bye.
That's it. Take it easy, guys. Now we're going to jump to our market analysis. So here is my my DAS software, and I'm going to be taking a look at a couple of different charts, and I'm going to add probably a couple of different indicators on here. So the first thing I'd like to take a look at, we mentioned, let's just take a look at the QQQ. I'm going to put this on the daily chart. So, we were talking a little bit about support and resistance. And, I'm going to draw on here some diagonal. This is a diagonal ray line. And generally what you do is you use the highest point from the current trend. And then you use the previous high point from the current trend. So we've kind of established a diagonal range here, somewhat narrowing. Okay, I probably would take this one and bring it back here. So we're kind of narrowing a little bit. We came into the moving averages, and if we zoom in, we can see that we made a little bit of a swing up, and then we've swung back down. Came into the moving averages, and of course, on the gap down today, we faded up. Okay, so the market would gap down and faded up. The gap down was on the somewhat negative news of Target. Also, there was a pretty big sell-off in Hong Kong last night. So therefore, we've gapped down, faded up. needless to say, the markets are in a narrowing down range. Let's take a look at the SPY. Okay, we also have that same similar kind of pattern of support and resistance, which is right here. And if I take a look here, we see that same kind of narrowing down range. Now, the big question here is, do we swing back up to the top of the range into the, kind of downward resistance level, or do we break down through the moving averages? Now, what I'm going to do is I'm going to add in here a study. I'm actually going to use one of my pre-configured charts. I'm going to load my settings and I'll bring in my MACD. And the MACD is the moving average convergence divergence. And let's see if I picked the right one. Boom. Yes, I did. And you can see here from the MACD that the green signal line is now starting to hook down and possibly turn back down over the red signal line. We're also seeing a possible divergence in the RSI, which is the relative strength index. A lot of times, the relative strength index will be the early trigger that things are starting to move back to the downside. Now, another important element and something that you should watch is right here. If you notice that this was the prior high on the RSI, and now we've made a lower high. So there's a high and a lower high. It's a much lower high. So that's showing a little bit of a divergence. It is a high here and a lower high here. But the fact that we've, pretty much had an almost equal high, and this is certainly not equal on price and volume, that's indicating that maybe this swing up is starting to lose a little bit of its steam. That's confirming what we're seeing here on the signal line and the hooking down of the green signal line, potentially over the red signal line on the MACD. You can also see that the histogram has that same kind of high, lower high indication, even though here we have a high and a higher high. So that's a divergence on the histogram on the MACD. It's double and triple confirmed by the signal line. So maybe this move up is running out of steam a little bit, and it's certainly something that we should be aware of, although it is not a fully materialized yet. Let's just put this in here as well. I'm just going to put my my diagonal lines on there. Okay, so that's pretty much what we're seeing in the market overall. Now, let me take a look at Target, TGT. That was the one we talked about today. Very beautiful earnings runner to the upside, but then on the actual earnings itself, it got knocked down pretty hard. We have faded back up a little bit, but we are still below the moving averages. Probably going to swing back to the downside in the near future, but needless to say, not doing too bad on Target considering the news. Certainly closing near the high of the day and recovering about 40% of the big gap down. But that is a tremendous gap down from 180 down to 150. And then over the last 2 days, we've recovered some of that, just about 40% of that. Next, we're going to take a look at Walmart, WMT. Walmart, completely different story. We have a gap up and go. Walmart came out with earnings. That also probably added a little fuel to the fire, in terms of Target. When Walmart did better than expected and had an earnings gap to the upside, that most likely led to higher expectations for Target. But Target, as we talked about earlier, had a very different story. Let's take a look at Apple. There's a saying that so goes Apple, so goes the market. And certainly you can see here, Apple is looking way stronger than the market, way stronger than that downtrend. Apple is sort of in a, I'm going to say it's a pennant / consolidation, and certainly could be swinging back up there to the point of control, which is way up there at 172. But Apple's hanging out here at 150. Certainly has not broken down. Now, one that we should be aware of is Tesla. Tesla very much in a downtrend, continuing to sell off and trade down. Really near the bottom of its range. It did remain strong for a really long time, and now it's certainly showing a lot of relative weakness to the market. Apple would be relatively strong. Tesla would be relatively weak. Walmart relatively strong. Target, kind of in between, but certainly getting over its bad earnings. Let's take a look at GBTC. We talked about FTX and the breakdown with Bitcoin. I mean, from a perspective of the indicators, the RSI looking very, very negative. Certainly the MACD and the MACD histogram looking negative. Certainly the chart is just, continuing to go lower and lower. This is a GBTC, which is the ETF tracking stock of Bitcoin. The other one that we like to watch is ETHE, which is the Ethereum tracking stock, also showing a lot of weakness. Certainly, the cryptocurrency, the two major cryptocurrencies, Ethereum and Bitcoin, still reeling from the effects of the failure of FTX, one of the major exchanges, and obviously the customer loss of almost $20 billion, which is, certainly, somewhat shocking. Let's take a look at USL, which is the oil contract. The oil is suffering a little bit from the fact that, there are concerns about a global recession. And as a global recession concerns, you would think that demand would drop. Now, currently, I believe it's pretty warm there in Europe, and certainly here in the United States, it's a little colder than average here in New York. But if the weather starts to get colder, then obviously, seasonally speaking, usually oil prices will go up, but maybe offset by the fact that that we have a concern about global demand if we are entering into recessionary times. So that's something that we should be aware of somewhat. ExxonMobil. This is an example of an oil company. This is ExxonMobil, a very, very large oil producer. This is one that we talked about in the DAS newsletter for a long time. Certainly at the high of its range, but from the indication of the MACD, maybe this run is starting to lose a little bit of stream. We also have a little bit of weakness in the RSI as well. But needless to say, a great mention and certainly a big run up from, I believe, the 60s. Yep, there it is at 60 1 year ago. This was mentioned in the DAS Trader newsletter 1 year ago, and certainly we've made a tremendous run to the upside on ExxonMobil. All right, so I want to congratulate once again all of the winners of our #1 Best Trader competition. You can follow us on social media, Twitter, Facebook, Instagram, etc. You already went through the market analysis, but certainly stay up to date with all things DAS from our monthly newsletter emails. Simply fill out the form at the bottom of the DASTrader.com website. Subscribe to our YouTube channel at DAS Trader TV for DAS Newsroom reminders. Follow us on social media at DAS Trader. Certainly, you could follow us at LinkedIn, Twitter, Facebook, Instagram. At all, certainly you could follow us. The #1 Best Trader also has an Instagram and various different social media handles. See you all in a week or so, a week to 2 weeks. Trade well, everybody, and see you at the next #1 Best Trader competition.